In this presentation, we're going to make a deposit into the checking account from funds that have been received from customers. In other words, we've got funds from customers either received from invoices that we later got payment on, or from basically sales receipt where we got paid at the same point in time as we did the work. We put those into a holding account so that we can then put them into the bank in the same format as they will be shown on the bank statement as in our books. Let's zoom into it with Xero. Here we are in our Get Great Good Companies dashboard here. We're going to be opening up our reports first. Let's go ahead and open up our accounting tab drop down, go on down to the balance sheet. Within the balance sheet, we're then going to duplicate the tab. So then I'm going to go back up top to where the tab is. I'm going to be right clicking on it and duplicating that tab. We're going to then change the date up top. We're going to make that date 2020. Let's go on ahead and make it January 31st, 2020. Update that report. I'm going to jump over to our flow chart that's going to be on the desktop version just to look at the flow chart here of what we have done thus far. We're down here in the customer section. We've had both invoices and we had basically sales receipts. This is just a demo. We're going to jump back into Xero just showing the flow chart here. So we have the invoices. When we had an invoice, it went to accounts receivable goes up. The other side goes to sales. Then we collect a payment on it. And we decided then we have to decide whether or not we want to put that payment directly into the checking account or whether we want to group them together and then put them into the checking account in one lump sum. And that's what we did. We put them into a clearing account that we'll then use to group them together and put them into the bank. And that might be even more useful or relevant if you have a situation where you're getting paid at the same time, such as a cash register, as we might have in the front of our basically store. We might have a cash register where we get cash and other kinds of funds. Again, we have the decision, do we want to put that directly into the bank when we record it, or do we want to put it into a holding account and then go to the bank? And we're imagining now we put these items into a holding account from these 2 points in the flow chart, and now we're going to add them up, put them together. We can imagine counting the cash, putting that together, making a deposit slip, and then going to the bank and depositing it in a lump sum. That means when we go to the bank, it's going to be in the bank as it's shown in our deposit slip at the bank, not necessarily in the format that we have received those deposits from customers. Therefore, we want to group it in the same way in the deposit into our system so that we can reconcile our system to the bank when we do the bank reconciliation, as we will do later. So that's what we're going to do now. We have some information then in this undeposited funds account. If we go up top, we see that we have we called it a clearing bank account. So we have all this money in the clearing bank account. That basically means that we're holding on to cash right now that we really should be depositing. So we're going to go ahead and do that. We're going to count up the cash in groups and then deposit it into the checking account. So we're imagining physically going to the bank with this money, cash and whatnot, and we're going to deposit it in a group type format. All right, so then we're going to say that we're going to make the deposit. All I'm going to do is transfer then. We're going to make a transfer. So I'm going to select the little plus button over here, the little plus button, and we're going to be transferring money. So I'm counting all the money that we have that's in our holding account, which is basically on hand, which we're going to say is represented in our books as the clearing account. It's going to go out of the clearing account. We're going to say that the first batch, I'm going to batch this up a couple different ways. Obviously, in practice, we would just take all the money that we currently have on hand and take it to the bank. But we want to go and group it and show how you would group these things together. And so we'll make 2 deposits out of that 21 something that we had, the 21,630. So first, we're going to group some together, and we're going to say that we're going to deposit then, and it's going to go into the checking account. And we'll make this happen as of, let's make it the 16th. So I'm going to say the 16th here, and the amount is going to be equal to, I'm going to say 8,438. That's the amount that we're counting. We're physically counting how much we have, and we're going to then make the deposit, go to the bank, make the deposit, and it adds up to that 8,438. So then we're going to go ahead and make the transfer. This will take it out of one account, put it into the other, take it out of the clearing account, put it into the checking account. Let's check that out by going over to the balance sheet and updating our report, see what happens within it. We have in the checking account, if we open up the checking account, we should have a deposit now of that 8,438. So the 8,438 deposit, scrolling down, we see it here, and it's a transfer. And then the other side is going to be, of course, coming out of the clearing account. So if we go back to our balance sheet and check out the clearing account, it should be going down now. So we have the 13,192 in there. And so there is it going down. So we can see it decreasing now. And you could basically see how this 8,438 is going to be matching out between these two items. Notice this is going up by the received payments, and then it's going down by the deposit. And when we make the deposit, you may even want to put in the reference tab, you may even want to reference these two invoices that we have here that are making up this deposit. And that way you can kind of tie it out. But you should be able to see it going in to the undeposited with these amounts up top, and then we're grouping them together in some format as we take them out of here and put them into the checking account. So let's do that for the rest of them. Now let's just do it for the rest of the balance that's in there. So let me go back to the balance sheet real quick. I'm kind of bouncing around here. Sorry about that. But currently we have left in the clearing account that $13,192. Let's make another deposit for that. Again, imagining we're going to the bank with that money, depositing it all. Then we're going to go to the plus button. We're going to make another transfer to do that. And we're going to take it out of the clearing account. So it's going out of the clearing account because we're physically taking it to the bank now. It's going into the checking account. And we're going to group all the pile of money that we have from all of our vast business dealings, which currently adds up to 13192. And that's going to be the transfer. And again, you might want to reference the invoices. So you could put the invoices over here in the reference number or the three payments. For example, this I believe consists of a $5,000 payment, a 7.5 payment, and a 692 payment. And that way you can basically tie this out, and you'll see it in the reference there. So I'm going to go ahead and transfer that. And so now it should go into the checking account because we physically took that money to the checking account. Let's go back over to our balance sheet, update the balance sheet, and now we have cleared it out of the cash and cash equivalent. We cleared it out of the clearing account. Now it's in the checking account. So if we go into the checking account and scroll down, we should see that 13. There's the 13,000 there. And if we were to go into that, let's say I check into that and see what that deposit consists of, we could see basically in the reference here now that you got that 5,000, the 7.5, and the 692. And that could help you in case there's some kind of problem tying out the deposit to the invoice that was involved, or if there's some kind of mix-up with regards to how they were grouped together when you put them into the bank. So that adds up to the 13,192. Obviously, no effect on the income statement right now because we're just taking money out of one checking account and putting it into the other, or one clearing account and putting it into the checking account. This amount did affect the income statement, but that happened when we created either the invoice or when we created basically the sales receipt in the Xero system.